Good day to one and all. This is Dr.Sivaraman of iknowindices.com. So I'll be presenting the Asian session live market analysis and forecast for the last week of October, 26th to 30th of October. Today we are on 26th of October. Between 5 and 5:30 GMT, I'll try to give the derived forecast for this week, the session-wise forecast. And on Friday, I will come and review the forecast, whether the market has moved in tandem with that of the forecast or opposite. Then also, I'll be giving the expected range in the four majors and two commodity pairs. Besides market reading, we'll also try to touch upon the effective trading strategy, what you could do. So first of all, I'll go to that of the derived forecast for this week. Then later on, I'll do the market reading. So this is the last week of October. So normally the month end and the month beginning time, we come across the trend reversal, the monthly trend reversal moves. So during that of the monthly trend reversal moves, the market is expected to show very volatile moves. And then they may either rise at the end or drop. But this time around, they are expected to make the rise in the case of Euro and GBP, and also in the case of USD and USD CHR. If you carefully watch, you will be able to understand that parallelly they are gaining the levels, or alternatively they are gaining the levels, the numerators and the denominator currencies. But in the case of the commodity pairs, they are making either way moves. So first of all, with regard to the forecast for this week, today, 26th of October, during the Japanese session, they are expected to make the swing and form of move, and then a nominal slide during that of the European session from that of the gained level, and then subsequently they are expected to make the swing and rise move. So we will be able to understand by our market reading that they are going to rise the market. So I'll explain it with the help of the following slides. So tomorrow, 27th of October, they are expected to make the swing and form up during the Japanese session, and then continue the rise during that of the European session, and then make some profit booking after the gain of the levels. Then on 28th of October, they are expected to make a brief downward stoppment and then continue that slide in order to induce those who have taken the buy position after the rise. And once those longs are liquidated out of fear, and when the bearish sentiment grips the market, then again they will rise during the US session. Then on Thursday, they are expected to make their dip and from a move during Japanese session, and then swing and rise during the European and the US sessions. Then on Friday, that last day of the month, swing and firm up is expected during that of the Japanese session, and then swing and slide during European session, and then swing and rise during that of the US session. So ultimately, they are expected to gain the levels after that of the drop, what we have already seen for that as a knee-jerk reaction for ECB press conference. So I was explaining in the spike trade strategy and also after that of Friday webinar that they are likely to make the lower level consolidation and then firm up till that of the European session on Friday, and then continue the drop on US session in order to accumulate the buy positions. Then subsequently they are expected to gain the levels from today onwards. So they are moving the market in line with it of the expectations. Then next week will be the first week of November. Again, it will be the month beginning trend reversal time. So they are expected to make the volatile moves and rise moves in the case of Euro and GBP. And at that time, you could come across the non-farm payroll could bring in a surprise. As a result, the market could make a very aggressive gain. So all the drops, what they have done for ECB will be just eliminated, and then they will start gaining the levels above that of last week high from that of next week. Now, with regard to the levels in which the currencies are expected to swing in this week, euro is expected to move from that 1.10 to 1.1350, and GBP from that 1.53 to 1.56 area. Then USD yen from 120.25 to 123.50 area. Then in the case of CHF 96.50 to 99.50. Then in the case of Canadian dollar 1.2925 to 1.32 area. Then in the case of Australian dollar from 0.72 to 0.74 area. So these are all the expected ranges in which the currencies are expected to swing in this week. And you'll come across that they will make the USD gaining and the USD weakening move alternatively, briefly, but most of the time they will be going for the contrarian move. So look into that of the net changes, then you will be able to understand that how they are making the contrarian moves. Now you come across the USD weakening move in all currencies. So euro is showing positive net change, GBP is showing positive net change, and Australian dollar is also showing positive net change, indicating that USD weakening move. Similarly, USD yen, USD CHF, and USD CAD are showing negative net change, indicating the USD weakening move. But slowly, they will just bring in that of more and more of the contrarian moves in the market. So don't become bullish and bearish with regard to the sentiment. What they are created, they create such sentiments to trap the traders. So keep in mind that don't try to become the victim of such act of the players. So you have to be smart enough to understand they are making the drop for weekend in order to buy, and later on from that of the week beginning they start gaining the levels. And so in the case of ECB press conference, people might simply say that Draghi was dovish, hawkish and things like that, and see what the hawkish and the dovishness can create such big moves in the market. So you have to understand there is no change in the fundamentals or in the economic conditions, and there are only certain decisions, policy making, and which has been announced. So they have not even taken that steps. They have simply made an announcement. These are all the likely steps they like to take in order to curtail the inflation, etc. And so in that process, the market reacts very quickly as if it has discounted the future. But after discounting the future, if you think really the market is discounting the future and made that drop, then they are expected to trade around that of the dropped level forever till the next announcement comes. But they don't do that. They simply recover everything, and people forget slowly when the next prime event captures the eyes of the traders as well as that of the players. So ultimately, these market sentiments are short-lived. So we have to keep in mind that the sentiments are short-lived and the players are here only to create the market sentiment and act against that of the traders. Now let us do the market reading in order to understand how exactly they are likely to make the moves in the market. So in the case of euro, 1.1002 is the low which is intact. They have not breached it. The high is 1.1036, but they cut the high and went above and still holding around that of the high. So they are likely to gain the levels slowly against the surprise of the traders. People might think that it is a dead cat bounce back, but later on, you know that they will induce the traders to go in for a breakout trade. After the breakout trade, they will try to trap. So keep in mind that whatever the smart way of trade we try to envisage, the players are there to know it beforehand, and they try to trap the traders by making quick knee-jerk reactions in the market. As a result, you find that the traders are forced to go in for distressed trades. Now in the case of GBP, 1.5307 is the low which is intact, and 1.5332 was the high. They just breached the high, went up to 1.5340 and holding around that of the initial high, 1.5332. They are likely to gain the levels up. Then in the case of yen, 121.06 is the low, and they just cut the low by 1 pip. And 120.50 is the high, which is intact, and they are holding near that of the low. Again, it is showing negative net change, so they are likely to come down a little bit, take out the stops, or later on make the gaining move. So we can wait for such downward stop and then try to take the buy positions in the case of USD. And then CHF 97.68 is the low. They just breached the low and went up to 97.62, and the high is 97.94, and that is not being breached. So it shows that they are likely to come down a little bit, about 10 to 15 pips, and then later on try to gain the levels. In the case of Canadian dollar, 1.3165 is the low. They just breached the low and came down to 1.3150, and holding below that of the initial low, 1.3165. So they are likely to come down in the case of Canadian dollar. Then in the case of Australian dollar, the high is intact in the case of Canadian dollar. Then Australian dollar, 72.08 is the low, 72.50 was the initial high. They breached and went up to 72.64. So they are likely to gain more and more of the levels. Okay, there is a question. What are other key timings for market reading apart from 3:30 GMT? See, actually, the players use such timing, so it is not my own timing. So when the players use 3:30 as the final time to set the initial lows and the high, so we should also follow that if you want to read their intentions. Suppose the players are speaking in Greek or Latin, then we should learn such a language and then try to understand what they are trying to talk. So it is not the question of our own convenience. If you want to read their intentions, we have to enter into their shoes. Only then we will be able to. Then throughout the day, we can compare this initial lows and the highs set around 3:30 GMT and find out what sort of moves they are doing it in the market. Now coming to that of the trade call. So what sort of trades we can identify as you come across that they are likely to gain the levels as they just breached the highs in the case of the numerator currencies and the lows in the case of the denominator currencies. So we have to do straight buy and sell trade in the case of euro. I'll try to suggest the trade. We'll keep a buy limit order, 10 pips below that of the market, and if it is filled, we'll take it. Otherwise, we wait for 30 minutes or till the late Japanese session, and if it is not filled, we'll modify and take market and quickly book profit during that of the European session, initial European session rise, because later on they are expected to make the slide during that of the late European session, and if you miss it, then only you can book profit during that of the US session. Keep that in mind. The session-wise forecast will give you, in case if you fail to book profit booking opportunity, and then you can wait for the next rise and book profit. Use the hedge order to limit the risk so that we are not vulnerably trapped. Then we will keep 30 pips take profit order, 1.1065, and the stop will be 30 pips below, 1.0995. And in the case of GBP, 1.5352 is the current level. We will keep the buy limit as 10 pips below and 30 pips above the take profit or the exit order, 1.5353. and 30 pips below the hedge order. The Australian dollar also will keep the buy order. .7245, 30 pips above will keep the take profit order. And sell stop. Okay. So we'll try to take the positions in the case of the numerator currencies. So these are all the orders I thought of. I can keep the limit orders as I explained that they are likely to gain as for the forecast, and also we have seen that they have reached the highs and just holding closer to the high and not cut the low from the start. So after 330 they have not cut the initial lows, which indicates clearly that they want to gain more and more of levels in the case of numerators today. Then Ini has got a question. Can we expect any level change in this week and in this month? Probably in this week. It is unlikely. Next month they could go in for the shift in trading zone. So you can make a note of it. What are the trades we are just envisaged, and we have kept only the limit orders and find out if they are filled and keep the working hedging order to limit the risk 30 pips below, and the exit order is 30 pips above. So how do we do? When it is filled, immediately we find that the hedge order is already placed, which will limit the risk to 30 pips. And once the position makes profit, we keep stop at entry. Once it makes about 15-20 pips profit, we keep stop at entry and remove the hedge order, so that if the market reverses suddenly, we'll be stopped out at entry so that we don't incur any loss. And if they go slightly lower, we'll be able to buy at a lower level. Otherwise, if the buy level, the current buy level or the new buy level is not making profit for 2 hours, then we can understand that they are reversing the market further. They are making further downward move in the market. So we can try to do the sell and buy trade. So we have to identify the type of moves they are doing it. If it is a brief downward move for 30 minutes, then it is stop and. If it is up to 2 hours, then it is extended move. Beyond 2 hours, if they just continue to make the slide and cut the new low, that means that they are making an intentional move on the downside. So immediately reverse the trade. So what's the type of moves, what they are doing it in the market? We should be in a position to easily handle the positions without much of a market fear, because the hedging will limit the risk. Now coming to the Dow, the daylight saving system off. From yesterday in Europe and UK, the daylight saving system is being switched off. That means the standard time is being used. As a result, we will come across the market is supposed to start 1 hour after that of the normal timing what they have been following till Friday. But you come across the banks open 30 minutes after that of the Euro-Japanese session closes. So as a result, what happens that you find the Japanese session gets extended up to 7:30 GMT, and you gain only 30 minutes here, and as a result, you find 8 GMT the European banks open for their currency conversion trades or of their exporters and importers. So 7:30 to 8 will be the gap time. But the US will go in for the switching off of the daylight saving from next week. So from 1st of November. So 2nd of November onwards, next Monday onwards, we will find that shift in the time of the US session also. So keep in mind that the early session is from 0030 to GMT, 1.5 hours from start of the session, and 2 to 6 is the mid session. Then 6 to 7:30 is the late session. 7:30 to 8 is the gap time. Then 8 GMT, the European session starts. So if you got any question, you can ask me. I'll answer to those questions. What is your forecast for oil? So oil is expected to slowly gain the levels, but not aggressively as envisaged in the case of currencies. So if you got any doubt and questions, you can ask me. I'll be willing to answer those questions. Okay, the forecast slide, I'm just keeping it for those who wish to refer to it or come late. Okay, Amy has got a question. What could be the range for Euro GBP cross in this week? Euro GBP is currently trading around 73. 70. Okay, Euro GBP is from that of 0.73. It has come down to 71 area, below 72, and they are likely to gain the levels. And see here, you come across positive net change for 3 pips. And if you look into that of Euro and GBP, Euro is showing 21 pips positive net change, and GBP is showing 27 pips positive net change. So GBP is trying to gain more when compared to that of Euro. So once it takes over, Euro takes over from that of GBP, then the rise will start. Till such time, they will do the lower level consolidation with the downward stop and below that of 0.72, and then slowly go to that of 73, 74 area. Then what is the take on gold? Okay, gold is also expected to slowly gain the levels, and it has not lost the levels what it has done, and so they are likely to gain the levels in the case of gold also. I don't have the gold quote here in this page because the commodities are not being listed here. Then J, details USD CAD forecast. So USD CAD, as I explained, that they are normally known to make either way stop-ins. So to start with, when Euro and GBP are gaining the level, they will try to make a downward push in the case of USD CAD. Then immediately people will think that, okay, all the market is doing the USD weakening move. Then it will appear USD CAD might come down further. But what will happen is after gaining the levels in the case of Euro and GBP, they will hold the gained level and start gaining the levels in the case of denominator currencies. So if you see from that of the earlier weeks, what are the levels in which those currencies were traded, denominator currencies, you can understand how they are slowly pushing the denominator currencies upwards, even though numerator currencies are showing the volatile moves. So in the case of USD CAD, they are expected to come down a little bit and then start gaining the levels again. What is the expected impact from the Reserve Bank of New Zealand rate decisions? See, when the major countries are not not taken any major decision with regard to the interest rate decision. Unlikely New Zealand dollar, the Reserve Bank of New Zealand would take any step further. It might be mostly unchanged, and probably in order to trigger the market, they could say that very soon we will try to go in for certain drastic decisions, etc. But anyhow, we'll come across the invariable volatile moves in the case of New Zealand dollars, because New Zealand dollar uh, is less traded currency when compared to Australian dollar and locally operated, not international level. So as a result, you will come across that New Zealand dollar could make quick aggressive gain when compared to that of Australian dollar, or sometimes it can make the drop when Aussie is gaining the level. That sort of moves they can do it in order to handle Aussie New Zealand dollar cross. So you carefully watch how exactly they are making the moves with regard to the net changes you can identify, and then try to understand which currency they are going to make moves. Then accordingly you can commit positions. So you have to read the market from time to time. That is very, very important. Reading the intentions of the player. See, the forecast is one which gives a larger outlook of the market. Okay, the forecast is the one which gives a larger outlook of the market. Then upwards, the range also is mathematically derived, and it is indicative levels in which the currencies could trade. And then the market reading we do on a daily basis to fine tune the forecast. Okay, when the forecast say that euro could gain, then we also try to find out by using the market reading whether the players intend to gain the levels. See what happens when all the traders turn long and nobody is holding sell positions. And even though the forecast says that they are going to gain the levels, what the players could do is they might make one downward stop hunt and then gain the levels. So we should not get caught during such downward stop hunts. So that is why I am trying to tell you that we fine tune the forecast using the market reading, and also we try to follow the market timings, because the market timings are very vital. Early and the late sessions, they handle the majors, and mid sessions, they handle the crosses. And during that of the gap time, they make the false moves. So you have to understand that how exactly they intend to make moves in different majors and the crosses during different time frames. So unless and otherwise you follow the times rather than the levels, you are not going to perfect your trading system. So these are all the orders I have just placed, but still they have not been filled. So let us wait till late session 6 GMT, and probably if it is not filled, we will modify and take it from the market. Otherwise, we'll wait for the European session dip and then try to take the buy, so that we will be able to book profit during the US session. Questions? What China's Friday rate cut would not that push US dollar slightly higher this week? So that is what people related, and I mentioned many times that, say for example, the non-farm payroll of last month, which was actually it was negative, and people thought that euro and GBP will go up, but they made the downward move for the soon after the announcement on Friday last beginning of this month, beginning of October. Then subsequently what happened, from the next week onwards, they started gaining the levels. So they can make the moves differently depending upon the trader's pending positions. So if you straight away envisage some sort of reaction in the market which is not happening, then immediately understand the players are not interested in making further drop. So don't envisage they may make the drop, they may make the drop and things like that. Then you might get disappointed or you might be bearish, but the market might be making an upward move. And in that, if you sell after the rise, you might be trapped because they continue to gain the level, induce short covering. Always keep in mind the players make the gains and then immediately the traders turn bullish and buy at the higher level as a breakout trade, or technically the resistance turns support, so a lot of traders go and buy. Then what happens? The players drop quickly. The rising, it takes a longer time. The drop takes a very short duration. Just 1 day or 1 week is enough for them to make a massive drop. Then immediately you think that the market is going to continuously drop. Then you might be disappointed. After dropping, they accumulate all the sells of the traders at the lower level, then start gaining the levels because the market, predominant of the traders will be sellers. So if the players want to make money, what they can do, they can only trap the short sellers because there is no buyer in the market. Where is the question of trapping them? So if there are no buyers in the market, all the traders have turned sellers because following the market sentiment says that market is bearish till year end. So the traders try to sell euro and GBP, so whom the players can trap and earn money. If you use the simple logistics, you can understand the players have to gain the level and trap the short sellers. And once the traders turn long at the higher level, then drop the market and earn from them. So alternatively, they trap the bullish and the bearish sentiment traders. That is why I always say that don't be moved by that of the market sentiment created. And from if you become emotional, then you will continue to lose however experienced trader you might be. Then do a system application to the pairs of emerging market, Russia, South Africa, Turkey. Yes, it is also giving the forecast, but I don't give it in the webinars, and only as exclusive forecast I give it to those who specifically ask for it, because I don't recommend the small traders to go in for such currencies because they are very, very volatile, and the traders may not be in a position to understand the volatility involved in that and the leverage involved in that, and they may think that it is yet another euro and try to take positions, but the players can easily trap there in the regional currencies wherein the volume is relatively much lower. See, in the case of euro and GBP, what happens is when they drop the market, immediately traders go and sell, so that it is easy for them to trap the short sellers. But in the smaller currencies, in order to induce the long holders to liquidate, they may have to drop 200, 300 pips. Only then those who are holding long positions will liquidate. Then afterwards only they will turn short. Then they have to hold it for a long time at the lower level, inducing them to do the short selling. Only then they will gain the level. So the type of play in that is totally different. The regional currencies are operated by the regional players. So keep that in mind and then trade accordingly. It might appear that they are making 200, 300 pips and we can easily make money. Similarly, we can also easily lose money. So no more questions coming forward. So I'll be giving I take this opportunity to thank FX Trade for the facilities provided to present the webinars using the YouTube channel. Then I thank you all for your kind presence here and interacting with me and understanding how exactly the trades can be perfected. So I'll come on 30th of October, Friday, and review the market forecast, what I have given it, and also the levels in which the currencies are expected to trade. So Mondays and Fridays, I'll give the Asian session live market analysis. And I also gave the quick trade calls during that of the ECB press conference time. So similar such calls I will try to contemplate and try to give it in FX Trade, in association with FX Trade, and that will be displayed from time to time. So the link of the recorded webinars are available in my blog, and once FX Trade sends me that link, I'll put it in my blog for your reference, and also I'll spread it using Facebook, LinkedIn, etc., Twitter, etc. Then you also come across in FX Trade under watch list, the recordings of the webinars are available. So I take this opportunity to thank FX Trade for the facilities provided. And you people, if you've got any doubt, you can continue to ask me using my contact details, like the dr@i-knoindices.com, or you can contact me through Skype chat, iknovindices@hotmail.com. Wish you all happy trading. See you on Friday.